Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 27th of August. All right, now I've just come through the weekend, and there's not a huge amount of extra geopolitical stuff to digest. Now, what we do have is, if you're just coming back to the markets from last week, we do have the US dollar a little bit on the back foot. You can see the Aussie, it's pretty much trading sideways, but a nice relief rally there on Friday. Now, that comes in with the sort of weak US durable goods. And also a few comments from the Fed. Jerome Powell, just at the Jackson's Hole Symposium, sort of more moving towards commenting about a possible neutral rate, okay, as in a neutral stance. Now, the market is still expecting 2 rate hikes from the Fed this year, but they are starting to talk a bit more about where rates are neutral, okay, where they're, giving the market support, but not actually hindering anything. And that's a slight change. So that little bit of a sort of neutral stance almost from the Fed was also seen as a little bit negative from their hawkish stance so far. Kiwi, a little bit high there as well. Dollar yen, okay, the whole issue around China and the US trade tariffs has dissipated. It's been a little bit loose, but, slowly edging higher. Euro was one of the big winners, moving through 116, sort of the figure, and just etching out a number of stop losses on the top side. Have a look at the daily picture. It's starting to look a little bit interesting, and Euro does seem to be leading the charge against the US dollar. Sterling starting to form a bit of a wedge formation, but overall in a downtrend. But short term, it's just going to trade sideways until we get some more specific news out of Brexit or more specific UK news. Dollar CAD, well, oil's back to 68.5. It is sort of starting to move back down with oil. But once again, you got NAFTA, you got some a lot of expectations around the Bank of Canada coming into September as well. So that's where the majors are. All right, so that's our starting point. You can see we've got some decent sort of trend lines on most of these pairs on the top and the bottom. So we've got plenty to work with. It's now a matter of trying to isolate the direction, right? Are these things going up or down? Like, you really need to have a look. So just before I go into the news and show you what's going on, let's just have a look at these, the technical aspect on the hourlies. Now, this is on the dailies, I should say, this gives you a bit more of a clear picture. It takes out a bit of the noise. Now, the Aussie, overall, to me, is in a downtrend. But you can see in the last, couple of weeks, it's starting to trade sideways, still with the downward sort of focus. Dollar Kiwi, I should say, Kiwi, it's at a very interesting level here as well, like right on sort of daily resistance. It looks like it wants to go higher, but just doesn't have the momentum. Dollar yen moving up and now sort of, if anything, sideways, but we do have that support trend line. Now, this is the euro, has been getting belted since April. It does seem to have found its feet a little bit down around 113, the figure, and it is starting to slowly climb a little bit higher. Now, we do have a whole heap of highs here around 117, 118, but at this point, it's the one pair that it is edging higher. Here's sterling, as I mentioned, still in that downtrend, but once again, starting to jam away sideways, builds up speculation for a move higher there as well. Dollar CAD also sitting on sort of long-term support going back towards January 2018. So, basically all the majors are at very critical levels. And this is why these geopolitical events aren't that great. If we had good fundamentals like economic numbers or central bank details at this point, it would be great because we've got the charts, we've got the entry levels. We just need to know what's going on. And these major currency pairs have been banging away through these levels the last week or so. So it's been a little bit tricky to try and really focus on which one's doing what. Now, if I just come back, I just want to show you what the US dollar is doing at the moment. So the dollar, it's just having a pause. Like the fundamentals to me are very strong. Okay, now I know we've topped out up here at 96.80. Actually, I'll tell you what, let me just blow this chart up so we can actually get a better overall perspective of what's going on. So we've had that top out up towards 97, the figure. It's now sort of jamming back sideways. You can see how sort of responsive it is to big events, whether they are geopolitical or just fundamental releases. It's now starting to trade sideways again, but once again, there's a massive sort of void on the downside. If it does get some momentum here down through 95 the figure, well, you could see it lower, but the fundamentals are generally strong, so I can't really see it going too far at this point. So they're the numbers we're sort of looking at or focusing on at this point. Now you come back to there's a whole heap of rumblings, and then this may be something to do with why the US dollar came off so hard and why Aussie and Kiwi rallied so much on Friday. Is People's Bank of China were rumoured to be in the market pushing the dollar yuan down. Okay, so buying one, and they just do it through the local bank. So you can see how quickly it's broken down through sort of 6.84, and now it's been down to 6.78. So this is moving a lot because there's a lot of speculators now jumping on this. Okay, the US tariffs on China would be an automatic sell one situation. So sporadically, we are seeing the People's Bank of China, which is the central bank, come in and really screw the market over. So just be aware of what's going on here. I think any moves to the downside are really short term. I mean, there's no reason to be buying yuan at this point, or dollar or Chinese renminbi, whichever way you want to call it. So, but you can see how aggressive that move has been. There is the abyss here. You never say never, but fundamentally, it should turn around once again, like we saw last week. You have a short-term little blip down, and then next thing you know, it's screaming to the top side. So we'll better keep an eye on that as well. So if you look at it's quite interesting, like the dollar index itself, and the dollar yuan or dollar China they seem to be correlating quite nicely. And actually, talking about correlations, it's not a bad thing to do on Mondays, right? But the market's sort of reconnecting after the weekend. You actually have a good look through not only what's coming out, and I'll come to that in a second, but have a look at the main events that are going through the market. So just looking at, because the yuan is a significant impacting pair, especially for the Aussie and Kiwi, it's well worth keeping an eye on this. As you can see here at the moment, like 78% and 76% of the time, Aussie yen and the Aussie dollar itself are the two big correlations, as is gold. Okay, now they have an inverse relationship just because of the way they're traded. But also look at the Dow Jones there as well, Dow Jones index. Okay, so it's right up there as well. So you can see what happens if anything happens to the yuan, then those 3 or 4 instruments are the ones to sort of keep a very close eye on. All right, and now if you come back over to the financial markets, try and work out what is going on with the major pairs or major instruments here. Okay, you've got the dollar index just, obviously drifting lower. And the Dow Jones has got an inverse relationship here with the dollar index at the moment. The US 10 years drifting lower, pretty much in line with the dollar index. And gold at the bottom here, as you'd expect, having an inverse relationship. The weaker the dollar gets, the more it jumps up, the more potential for some sort of carnage. But we're not seeing a huge, there's no real major pressure points. This is just something to keep an eye on as you go through the markets. You can see when these instruments do start correlating very closely, whether it's positive or negatively, you can actually start to see where the currency direction is coming from, if it's any of these instruments. Okay, now, so Mondays, just coming back to the major data releases. If I just come into the MyFX Trading Hub, now, you'll notice that as we go through the week now, first of all, every day, you should be really assessing the trading conditions. Now, there are a number of geopolitical events still sort of lingering in the market. They are dissipating, or the market is becoming desensitized by them. So I expect that to sort of slowly work itself out. But as I said, with all the major pairs near daily trend lines, they want to move, but there's just no drive. What we're looking for is give us something substantial to work with. And this is where your upcoming events come into play. Now, we've still got a day before we get anything sort of serious. We've got the US consumer confidence numbers on Tuesday. Then you come into Wednesday, you've got US GDP numbers. Thursday, I think Thursday is going to be a bit of a cracker, or probably after the US GDP. You've got ANZ business confidence numbers. Now, as you come through, now this usually isn't that important. But the RBNZ highlighted this is their biggest concern. And if these numbers are weak, they're going to have to start potentially cutting rates or doing something to stimulate the market over there. Aussie private capital expenditure, a very good number. It's like on the back of consumer confidence as far as, if there's been money injected into the economy, that's a very positive outlook. If it's weaker, well, then the inverse. Then you come back down into the Canadian GDP numbers. Now, we've had really strong inflation numbers a week or so ago, so these are going to be important. Just a bit of an overall health check of the Canadian economy. And then at the same time as that, those CAD GDP numbers are coming out, you've got the PCE, or consumption numbers, right? This is a good number that the Fed looks at very closely, general spending. And then coming into Friday, we've got the Chinese manufacturing numbers. I still think it's a little bit early for the US tariffs to be impacting the Chinese numbers. It's probably next month. You would expect something to come in. And then you've got the Eurozone CPI flash estimate there as well. So when you do come into the start of the week and you look at a lot of the numbers, you can get a good sense of, okay, there's huge potential as you go down through the week. Sometimes building up that anticipation in yourself can actually be quite negative because you start to get a bit of a performance anxiety if the market doesn't give you what you expect. So just have a look at these numbers and factor them into your trading week. If you can see what's going on around these, well, that's good. They may give us some potential momentum. And what we're looking for is we're looking to connect the technical aspect with the fundamentals. You're not just necessarily looking at these numbers and going, okay, I'm just going to jump in and start trading these short term. Yeah, sometimes that works, but what we're looking for is a decent move. A lot of these major currency pairs are banging up against, as I said, major trend lines, and they are just trading sideways. But one of the key things is actually having a look here. If I just come down just a touch, you have a look at the daily analysis snapshot, right? This is a little bit of indicative of what's going on. Now, overall, I'm still bullish the US dollar, and I'm bearish Kiwi. But what we're looking at very closely is, at the moment, on a lot of these pairs, I mean, I've got the euro sideways at the moment, but we are starting to get a little bit of a mix. Now, some of these, the technical outlook on some of these pairs was a lot clearer last week. The daily sort of perspective is somewhat different. And if the euro keeps going up, well, the daily chart will turn to a positive, and you will have an upward sentiment here on euro pretty quickly. So that's one thing to keep an eye on. We're at that sort of tipping point where some of these majors are going to go from, being pushed and pushed and pushed down by the strong dollar to actually going back into an upward bias technically. And you can see here that would sort of suit, if you have a look at sterling, I mean, it's central banks on track to be raising rates. The economic data has been strong, but overall, and this is probably mainly to do with Brexit, it is in a downtrend. But once again, it's very close to tipping point. Now, I could have probably had the hourly chart as a positive, but overall it's sideways. This is very close to going to an upward bias, and same with the daily chart. And that will change the sentiment here on sterling very quickly. And that's why we're at these critical levels and we need something to come out. Then you think, well, okay, that's pretty huge. So what do we need for sterling to move along? Well, we need US or UK data. Now, there's nothing coming out of the UK of any significance. So the US numbers this week, very important for sterling. Coming to the Aussie, sort of likewise, it's sort of banging away sideways. The Kiwi, well, the Kiwi is very similar to the other currency pairs. If you're looking at the charts here, the hourly chart is sort of banging sideways. If it starts to move up and we edge up through 67 to figure, the daily chart will go from sort of being down to almost flipping to an up. All right, and that sentiment will confuse things somewhat. So you'll go from an overall bearish sentiment to pretty much sideways for the moment as that mixed central bank and economic data and technical outlook sort of gets a little bit convoluted. The the US, now Jerome Powell has started to talk more about a neutral level for the dollar or rates, right? That's because they're getting close to their whole path that they've laid out for us over the last year with interest rates. If that gets to where they are, of course they'll go back to neutral and they'll go, we'll reassess from here. I think it's a natural progression. If anything, he's backed himself, even though Trump has been openly criticising the Fed. I think it's a pretty good stance and pretty common sense. So at the moment, the US dollar is still bullish to me. It will have short-term knee-jerk reactions, obviously, to data, economic data, like the durable goods was really weak. You get the market's sort of overly long dollars, and you see the dollar slide. But once again, if you have a look at the dollar index, it actually hasn't gone that far. Okay, it's off a little bit, yeah, sure, but that's no significant. No one's really looking to really run hard against the dollar at this point because it fundamentally is still strong. The CAD also very close to going to probably bearish sentiment there on dollar CAD if the technicals, if the dollar keeps drifting a little bit lower, and Swiss National Bank the same. So as you come into the week, right, you come back to your charts. You're looking through these charts, trying to work out where all the major opportunities are. Now, these are the hourly charts. You can see here you look at your overall sentiment. I'm a bit sideways on the Aussie, so I'm not looking for a potential move higher. We have another resistance line on the top side. The sort of geopolitical situation in Australia, they've changed prime ministers. No big deal. It's business as usual. So don't get overly excited there. If anything, I probably suspect we might see a couple of little knee jerks above some of these levels, but we are lacking momentum, right? Whether it's geopolitical or economic, all these pairs are sort of just going to be grinding sideways for the next 24 hours. So wait, give the market a bit of a chance to open up. The range trade, if anything, looks like probably the best trading strategy to go forward until we wait for what's going on there. We need just a bit more information. And just to finish up, just come back over here to the major news pages. Right, dollar falls as Powell sees little risk of inflation overheating. Now, once again, the media's put a bit too much into that. There's a nice, if you go into some of these stories, like Fed's Powell, they've got nothing to write about, right? So they really harp on about all sorts of crap. But they are talking about how the Fed is starting to move into a neutral stance, and that's because they are at the end of their interest rate hikes that they've laid out for us. That's normal, right? But they are sort of trying to talk it up a lot. There's the usual standard mass shooting in the US over the weekend. That shouldn't really impact the markets. And if anything, we're just going to wait for the markets to open up. Here's these best buddies over here, North Korea. And Trump, you probably expect that to blow up at some stage as well. And that's pretty much it. There's not much else to do at this point of the day, except get your charts organised. Have a look where those key, as I said, the key releases, when they're going to come out. See if you can factor those into your trading week so you can keep an eye on where things are moving. I think at this point, obviously, the US dollar is going to be very important with a number of releases. Sterling and Euro, definitely big opportunities. I think there could be a big counter trend on sterling. I know there's a lot of negativity around the UK with regards to having no Brexit deal at this stage, but there's a big chance for a decent move higher. And Euro does look like it's leading the charge. So if Euro, probably keep a very close eye on Euro. If you actually come into the economic data for today, we've got the IFO business numbers. Now, they're a pretty robust number, usually. We have seen these numbers sort of just not do anything with all the geopolitical stuff going on. But the trend in Euro is short-term is slightly up. So if we get strong numbers here, we may get that still moving to the top side. That may be enough to get sterling, Aussie and Kiwi moving higher as well. So just make sure you have a look at that as you go through Monday in that European session. There's not much coming out in the US, so I wouldn't be holding out and staying up in front of your screens. All right, guys, that's it for me. Have a good trading day and a good trading week. I'll see you in the trade zone. Cheerio.